Okay, good morning everybody. Mike Niemiec here with some early morning grain and oilseed comments for this Wednesday, August 28th. Well, we pretty much have a mixed trade overnight. We've been pretty much sitting on our lows. The wheat market, which was trying to have a little bit of gains yesterday, now it's down 5 to 4 cents. In the winters, down a penny in the spring. Corn market's unchanged. Beans are up a penny. Meal's up around 50 cents and oil's up around 5 points. So like I say, we're sitting at our lows. I'm going to take this in the direction of where we are coming towards the end of the month and first notice day for the September futures. And with that, you start to see a lot of liquidation in the marketplace, which is somewhat commonplace because of the calendar. And we've been noticing where the open interest has been coming down here of late. So I wanted to point that out. The September futures are going to have their first notice day once again on Friday. We noticed that we had some corn registrations being canceled last night, down 104. What they're looking for in deliveries right now is in the neighborhood of around 0 soft red winter wheat, maybe upwards to 1,000 beans, maybe up to 2,000 soybean oil, 750 meal, and maybe up to 1,000 corn. So be aware of that come on Friday morning. So once again, end of the month, liquidation on the open interest and the deliveries coming up forward as well. The other thing I wanted to point out that as we end the month, we're going to be starting the new month of September. It's a new marketing year for corn and soybeans. I just wanted to point out that once again, our demand picture hasn't been all too bright. Right now, we stand at a 13-year low for our bean sales at roughly around 5.26 million tons. And at the corn, starting out the new marketing year, we're at a 14-year low at roughly around 4.68 million tons. So we know our row crop sales for corn and beans haven't been all that good, and it looks like we're going to start out the year that way as well. So we need a little bit better job there as well. As far as Farm Futures magazine that came out yesterday, now for the U.S., they're coming out and they did a farmer survey, and they're looking at the corn farmers maybe planting 4 million more acres of corn coming up this year, and maybe upwards to around 7 million more beans, with the farmers in the winter wheat belts looking at a 500,000 acre decline. So once again, here we are, don't have any demand. We had a poor demand and a big, large carryout season this year. We know that South America had a big crop. What happens if they have a big crop? We're going to have more acres and we're not doing any demand. It sounds like a bad recipe to try and get out of the hole that we're in as far as a non-bullish environment with prices at their lows basically for the year. Other than that, we got an ethanol report coming out here today. Those weekly export sales will be on out tomorrow. We got a Canadian production number coming out here at 7:30. We'll see, we take a peek at that. Yesterday was the cutoff day for the commitment of trades report that comes out on Friday. And right now we still have them with the modest net short positions in the corn, beans, and meal. Now they're a small net short in the soybean oil, and maybe just a small net long in the soft red winter wheat. So once again, poor demand, more production around, weather, keeping an eye on that. The forecast is still going to be somewhat on the cool and maybe on the a little mixed as far as weather goes. But obviously we got to still continue to keep an eye on that because the growing season needs to be extended, and that could probably be the only thing that potentially going positive in here going forward. My opinion's not that of ADM or ADMIS. I thank you.